Okay, so the next thing I thought we would touch on is the issue of bill payments. And I know from, and this Leah touched on this earlier, MNP has done a survey through Ipsos roughly once every quarter for the last couple of years that suggested that overall Canadians are reporting that, and this was prior to the COVID-19 crisis, but they were reporting that they were within about $200 of not being able to pay their bills every month. Obviously, with COVID-19 now in play, that's another huge factor in this. And so we're seeing people that, have been laid off, their incomes declined, maybe even with some government assistance, they're not going to have as much money as they would otherwise have, and they're having some trouble paying their bills. And so the question there, I guess, would be how to sort of deal with that. If it's utility payments or landlords or whatever the issue is, how we communicate about those things or what they may want to do. And then in conjunction with that, if people are finding that they're falling behind, is it a good idea to look to get new credit? Should they be looking at putting some of these, getting cash advances or getting a payday loan or getting a line of credit or some kinds of things like this. So just interested in your comments on both the bill payment side and whether people should be borrowing to try to cover both the bill payments and maybe other debts that they have.
Thanks, Wes. I'll address that one first. So in terms of payments, again, I can speak to what's happening here in British Columbia. A lot of it is tied, of course, to the rest of the country. But I think both at the government level and even organizations, other utility companies, even the Insurance Corporation of BC, are granting a lot of pausing for people to help them, manage the most important basics that people have, which is their rent and feeding their families and things like that. To answer the question, should someone seek a loan, to help cover their bills, cash advance, or I say absolutely not. I mean, that's my personal, my professional view is that, you don't want to borrow from Peter to pay Paul at this point. And I think that, the idea of being in default, I think is a very, very uncomfortable idea for a lot of people, because even most of the clients that come to see me looking at a bankruptcy or proposal, they've been very, very diligent in making minimum payments. So the idea of going into default is terrifying for people. But I think that it's something that we need to get a little, I hate to say it, a little comfortable with, is this idea that we really, at this time, I think families really need to prioritize keeping a roof over their head, keeping food on the table, keeping, ensuring that they can cover the transportation costs that they need to. And it's got to be, very needs-based. And unfortunately, creditor payments fall down the list in this environment.
I agree, Lana. I think that applying for any deferrals that are available is important. But when it comes down to it, if you're going to miss a payment, at least communicate that with your creditor. Let them know the situation. I always say communication is key always, even when you're in default. Because if you don't talk to your creditors, they'll make assumptions, and those assumptions might not be the facts. So if you're going to miss a payment, communicate that, but you may have to accept and sit in that discomfort that you are going to miss payments. Now, with respect to getting a loan or a line of credit in the short term, again, short-term Band-Aid solution. It's not going to solve the problem in the long term. If you are confident that your situation financially is short-term and that you have a very temporary reduction in income and your income is going to go back to normal or higher than normal and you can repay the short-term financing, then talk to your financial institution. I certainly don't recommend a high-interest short-term loan through online payday loan type companies or the ones where you walk in and just get a cash loan that has to be repaid at 20 or 30% interest. No. Look longer term. If you are eligible for some financing, look at being able to spread out that payment over a longer term. And look to your future. Be realistic with yourself. If you don't know that your job is going to be steady and back on track within the next month or two, I don't suggest getting a loan. I suggest looking at the other solutions.
Great, that's great. Thanks very much from both of you. Yeah, I would add to that. I think it really does depend on the person's situation, where they find themselves right now, what sort of financial position they were in prior to the COVID-19 crisis. Because again, as Leah touched on, I mean, if you're going to take on some additional debt, you want to make sure that you can pay it back fairly quickly and not incur a lot of interest and not have sort of, additional punitive charges because of it. So I think that's an important feature of this. And again, for some people, if they have the credit facility, they're able to go to their bank or something like that and get a relatively low interest short-term loan that can help them get through this period of time, and they're able to pay it back fairly quickly afterwards, then that's fine. But if they've already got a lot of debt, and it tends to be high interest debt already, if there's any way to sort of avoid that going forward, that would be obviously for the best.